Good morning. Let's see. I'm not live. It looks like I am. Okay, so today we have a little bit of news. No, we have a little bit of news. FOMC meetings come out at 2 p.m. Um, am I live right now? Am I live right now? They worked better yesterday. Trying to confirm if I'm live or not. Is this thing on? Am I live or no? Everybody make it seem so easy. Come on, guys. Give me a shot here. Am I live? Am I live? Okay. Everybody make. All right. So I am live. Let's go ahead and get started. The market is open, and I'm not a little bit behind, but we're doing just fine. Swap over here to the trading window. There we go. Excellence. All right. Good morning. Good morning. Good morning. Good morning. So the market is open, and we are trading right now. Before I got started, before this morning, before we got started, we wanted to take a quick look at the higher time frame to kind of give ourselves an idea or position ourselves in a way that would make kind of make sense, right? So the first thing that I wanted to look at was the daily chart. On the daily chart, I took a look at yesterday's range. So yesterday we came up to this prior day high where we have these relative equal highs that was created yesterday. Okay. After that, we dropped down into the discount of this up close candle, which is Monday's candle. So technically, I was just looking for see if I could find some liquidity. Like where could we draw to on the higher time frame that would be the best move for the day? And what I mean by the best move for the day is if we were to take a bias, which would be the long leg, right? So there would be a short leg. If we take a look at this overall range, this would be a great trade, but compared to the long leg of the trade, it was a short leg of the trade. So we had some extended range with the tariff news on Monday. Now, today is Wednesday, and we're looking at Monday and Tuesday's candle to give ourselves some area to get into. So then I'm gonna drop down to the 4 hour chart. Excuse me. We're gonna just drop down to the 4 hour chart and quickly take a look. The market is open and it is moving, but we'll get to that in a moment. I just kind of wanted to flesh this out before I begin. Get these thoughts in my mind. So if we take a look at the imbalance that we drew to yesterday, we stopped here. We wicked up just a little bit higher. We did not quite take out the prior day high of this candle's wick, but we did close here. We traded up above the close of this up close candle. And then we saw yesterday that amazing move that we had to the downside. Excuse me. So there's this gap or imbalance that was formed here. And we traded below it. We traded down from consequent encroachment, then we moved away from it after tapping the high at that level. Yesterday's low was right at the high edge of that gap. We popped right back up, traded just a little bit higher into the low wick of this up close candle on the 4 hour chart. And then we descended down below this imbalance again. We gapped higher. We didn't really gap higher, but we opened a little bit higher. We traded low below that candle again. Then we opened very low in the discount and discount low of the gap, traded lower, close. Then we open on this 4-hour candle right about 2 a.m. at the beginning of the London session, and we close just below consequent encroachment of that gap. So our current candle, our current 4-hour candle, where we have roughly about 22 minutes left in this candle, we're sitting just below consequent encroachment, right inside of the wick of this up close candle. I'm gonna drop down to the 1 hour. We're gonna drop past the 2-hour candle, and we're gonna take a look that we just ran right to the closing price of that up close candle, and this is right after the open. Now, the questions that I had when I looked at this earlier was, instead of looking at the lower time frame first and looking for that first presentation fair value gap immediately, that I wanted to take a look at this area because I believe that we were going to see price run into this gap pretty quickly. I'm just going to call that a gap. And no, I didn't say that, did I? That I believe that we were going to be a part of a move that was already in progress. That's what I wanted to say. I believe that we were going to be in a move that was already in progress. So when we're looking at the higher time frame candles, what move is already in progress or about to be in progress? So there are two things going on. There's this imbalance that we moved from right in the middle of London session. This is roughly the London session high, if I'm not mistaken. Yep, that is London session high. You can take a look at this because I have London session London session marked out here. I'll go ahead and copy that and I'll paste that here. So we're in the premium of London. We're pressing high inside the premium of London. Now, what I was looking to see is whether or not price was going to run into the wicks of London session or run London session high, because I'm really looking for that pool of liquidity that would draw price to it to either send it to the downside or have it run back to the upside. Um, like I said in one of my previous videos, I believe that once we got to this low, there would be consolidation. That I realized that there was going to be extreme consolidation, extremely long ranges going back and forth. No, I didn't really think that, but we have what we have, right? So let's go ahead and drop down to the lower time frame so that we can see what we're dealing with right now. Let me see, go ahead, 5-minute chart right there. We'll do a 5-minute chart. We just ran to the high of London. And we did this immediately off the open with almost no um, no draws to the downside. So the first thing that I'm looking for is that first presentation fair value gap. Now, there's an imbalance here, but we've run over it. We dropped down into the down close candles here, and then we popped up. So what do I think we're going to see? I don't really it's difficult for me to form a bias like that immediately. I'm looking at that green line because that's the high of that hour. Now, um, because we just took London session high, and this is also the high wick of the 4-hour candle. That white line is the 4-hour candle high. Excuse me. All right. Hmm. So this white line is the 4-hour candle high, and we've just kind of blown right past it. And as far as the hmm, electronic regular. Oh, okay. There was no gap. I was like, what am I looking at? So there's no real gap. Here's an imbalance. There's a small imbalance, and we've run to the high of the gap from that higher time frame, and we've just touched it. The next level that's coming up is the daily opening price. The opening price of the up close daily candle that we saw to the left. That's Monday's opening price. It's coming up. That level is here. And this has me really curious because as soon as the market opened, we immediately run for this area. Either we are uh, We have if we could have a strong bullish signal, which I doubt, or we're just going to run to this level, which is that opening price on the daily chart. Right now, we're in the wick of it. Excuse me. On the daily chart, we are in the body of the daily chart on the candle on the daily. Sorry, we're in the body of the candle on the daily, and we have just closed in rapidly on its opening price. It looks like we got very, very close to it and rejected. We didn't quite touch it. On the 15-minute chart, there is an up close candle to the left. Mm, 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 mm. I'm gonna use my imbalance measurement to pull that candle forward. And the only thing that I'm looking for is consequent encroachment of that candle. And it seems here, this is the level that I'm looking for. I'm just going to use volume imbalance. That consequent encroachment and that daily opening price line up exactly. Those two levels are exactly the same price. I have a little bit of lag on I have a little bit of lag on my hmm, excuse me. I have a little bit of lag on my trading view. And that could possibly be because I'm running so many things through my system. So CPU's at 30%. Okay, that's fine. I don't think there's much else that I would need to get rid of. Probably just that. I'll eliminate that news tab. Because sometimes Google itself does have a huge pull on your system. Yesterday we did very well being patient because our main focus was time, right? Our main focus was not price. It was not immediately looking for an entry. It was what time is it and what time will it be when I believe that price is going to be at a certain level. If we look at yesterday's chart, the move of the day began just a little bit of right behind after 10 a.m. Just a little bit after 10 a.m. And I appreciate um having my grass cut or a neighbor or they're having their grass cut the right now this time of morning. That's really, really awesome. But it is how it is. Now we're going to notice how we just dropped right below that price. This line straight up and straight down, not a very good entry for me because there's really not much to say as far as market structure is concerned. If I went to the lower time frame, the lower time frame might show market structure shift. It may show something that would say, "Hey, guy, go ahead, get involved with this trade." But I don't see that here. I see that we moved up above we moved up above the what level is this? 4-hour high. We moved above the 4-hour high just briefly. We dropped below the 4-hour high. Excuse me, and now we're approaching it again. This should be a 4-hour chart here. That's why I'm just a little bit confused. That is the high of the previous 4-hour candle. We have 14 minutes left, and it seems as if this candle is rushing to get back into the discount. Mm-hmm. In 15 minutes will be 10 o'clock, roughly. We have 10 a.m. here. The macro begins here. Let's see, there's 10 a.m. here. I would imagine that this is the first presentation. This imbalance is formed where? This imbalance is formed on the 15-minute chart. We're also coming below the consequent encroachment of that gap on the 15-minute chart. Mm, that seems like a solid entry. Hmm. But I don't really want to make a trade prior to the macro. No, I don't want to. I don't want to make a trade prior to the macro. I want the macro to open. I mean, I want the macro to begin first, and I also would like this hourly candle to close as well. The only thing I don't like about it is I am not sure. I have a lot of stuff on my screen. I know. I'm going to begin to eliminate that stuff. Just a second here. Just a second. Start eliminating a lot of this stuff so I can clearly see what I'm dealing with. This green line is that hourly high. Want to get in when I want to get impatient is when I don't want to watch the complete candle wick form on the higher time frame. Sometimes the wick on the higher time frames are the better part of the move, and I say, wow, if I entered at the high, if I got short here at the high of the prior up close wick as we were coming down, then I could put my stop above, the current high. However, let's say the next hour opens as well and runs that level too, right? What would that look like? That would probably look like this. It would probably look like a high, a low, a higher high, and then a lower low, right? Kind of just like the typical market structure shift, right? So just being at risk of having this high run where I would put my stop or place my stop, then I wouldn't want to get short here. Although it looks very good on the higher time frame. So I'll bring up the hourly chart because I think that the hourly chart is going to help us see a little bit more of what we're dealing with here. But this is going to confuse us a little more. All right, so the macro is beginning in a few seconds here. There's the up close candles from the pre-market London session. We went up above the London session into that imbalance. We touched it and then we began to reject it. This is the 15-minute imbalance that we are attempting to close below consequent encroachment of. There are 15 seconds left in the 5-minute candle. There are 10 minutes left. There are 10 minutes left in the 15-minute candle. So I'm a little on edge. I'm a little wired up, but it's because if you watch when you watch this, or if you attempt to do this, uh, it's like the old saying. It's like trying to corral cats, right? It's kind of like trying to herd cats. They're doing it's all these different things moving in all of these different directions, and they're giving you confluential signals, right? There are confluential signals that I'm seeing. Now, what I want to ignore is I want to ignore all of these down closed candles that we're respecting and that we're rising through, right? I feel like, oh man, I have to ignore that. Um, and it's only because I'm looking for the long term move, right? The move that'll move for an hour and a half or 2 hours, and not the one that'll move from the opening price to about 9:30, 10 a.m. See the small imbalance right here? It's straight up to the high of it. Mhm. Yeah. No, do not spray and pray. Do not spray and pray. We're gonna pick our shots. We're gonna plan our shots, and we're gonna take the shots. We're not gonna just launch. We're just not gonna launch things. We're gonna hold tight here. Now, at the end of this live stream, if the market has moved up another 3%, 4%, 5% in this direction, that's okay. That's okay. What I really wanted to see is us hit the opening price, that daily opening price, and that up close candle on the 15-minute chart. I think that would be really, really cool. And what I would expect to see is, at the very end, a very aggressive impulse where price kind of grinds like this for a while. We'll move closer to the opening price on the daily candle, and then a very aggressive push, excuse me, to get us above it, and then a move to the downside. On the 15-minute chart, we haven't had a down close candle since the pre-market. Okay. 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 Hmm? Okay, we're at the low of that up close candle on to the left on the 15-minute chart. Here on the hourly chart, it's also marked out here. And it's roughly the exact same size as that 15-minute candle. Some nice little consolidation right here. So the candle that we're focused. Mhm. On the way down, I'm just noticing how this wick comes up to the closing price of this up close candle almost exactly, and then delivers to the downside. This is the up close for the hourly candle. And then this is the movement that I'm targeting. There's something similar to that, where we'll come up to the wick, because beyond the high of this level, 17,628.75 is the wick of the hourly candle. I'm sorry, the wick of the daily candle. It's just a massive wick. So if we did a 50% retracement on that, it would be, I mean, it would be so many handles, it would be ridiculous. Okay, price on the 15-second chart, 5-second chart seems to be curling over. Seems like we're rolling over right here, doesn't it? There are 15 seconds left in the 5-minute candle. The last 10 seconds are going to tell a story. Excuse me. The last 10 seconds are going to tell the story of this 5-minute candle. In five, four, three, two. Okay, it was bullish. Yeah. Mm, 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 mm. On the 2-hour chart, there's a gap in price right above that up close candle that have marked out um as a potential bearish order block. It is potentially a bearish order block. We struggle to get into this range and struggle to get up here, which is normal for high resistance liquidity. There's a lot of levels to I want to say south. There's a lot of levels south of where we are now. That would serve as a very nice liquidity pools for sell side. If we were to move down into sell side, I could see us taking out 17,100. Um, is that 17,100? How about that? Mm-mm. Mm. 16,673. Okay. All right. All right. The market is clearly moving to the upside right now. We're in the macro. We've been into the macro for about 6 minutes. Now we are focusing Mhm. What happens with this particular candle? Mm, mhm, mhm. If you trade ICT, what is your setup or your variation of that? When I say that's exactly how we should actually probably describe it. If you trade ICT, what is your ICT setup, your favorite ICT setup, or what is your variation of your favorite ICT setup? Meaning, the same concept that somebody else uses, but because you've studied both, you know the similarities, right? You know how it's kind of derived. Mm, 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 mm. We are right at the low of this gap, sitting here. Okay, 9:58. Right here on the 5-second chart. I'm just trying to see how price is reacting to the smaller time frame gaps. I see an imbalance here. It's just like a short term or a short time frame consolidation. Consolidation on the lower time frame. I didn't want to drink too much coffee this morning. If I get too wired up, I might just start pushing buttons. Yep. Mm, mm. 30 seconds left in this 15-minute candle. Excuse me. 25 seconds left in the 5. There are literally 25 seconds left in the hour. And then we will see what happens when the next hour opens, whether it's going to give us a push to the upside or whether or not this particular candle is going to be the high of the day. What do we think? Do we think this is going to be the high today? The high of this candle is going to be the high of the day? This next candle is going to show us, no, it's not. I'm going to make the high of the day. All right, so this is the prior high of today's current candle. On the 1 hour chart, excuse me, between the mm, last 2 hours, that's a huge expanse. How our last 1 hour candle expanded to the upside very nicely. We're at the high of the new week gap, the new week opening gap. We just penetrated the high of the new week gap, and now we're at the low of the prior daily gap. This gap would be do 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 boo boo. Oh, that's the gap between Monday and Tuesday. We're at the low of the gap between Monday and Tuesday. Mhm. Just shy of the consequent encroachment or the mean threshold. Just shy of the mean threshold of this up close candle in the 15-minute chart. We've arrived at this particular point right around 10 a.m. The time is right. Let's see if the structure is right. The time is right. So this is the prior high that we put in. Hmm. Okay, we're getting close. Price is kind of just stalling us out just a little bit. This is a 50% retracement from the high to the lows where we are now. 50% retracement from yesterday's high to yesterday's low. Well, yesterday's high to the pre-market low. 50% retracement, tight consolidations, price slowing down. A lot of high resistance liquidity. Bop, bop, ba, dop, blah, bop, ba, bop, ba, bop, bop, ba, bop, bop, ba, da, bop, bop. Come on, come on, come on, come on. And I'm not really speaking to price. I'm really speaking to myself. I'm really speaking to myself. I'm like, come on, buddy. You see this gap right here? Don't really ignore it right now, right? Don't ignore this gap. I'm just gonna not ignore it. I'm just gonna pull it forward. We're coming into the level that we were looking for. A lot of thoughts just crossed my mind. The first one was that I should go ahead and I should like create an order like this, a sale, and basically just kind of like ghost it. This is a great feature of TradingView. If you guys ever use it, this is a great feature of TradingView. That this trade is not live. I did not sell. I did not sell at this point. I just put like a ghost trade on, I guess you would call it. We did not hit consequent encroachment of that gap. We are in the discount of that 15-minute candle. Is it trying to stall me out? Is it trying to get me to take the trade here so that it could hit consequent encroachment? I mean, sorry, I keep saying that. Hit the mean threshold, run the mean threshold, double back. Now look where we are. That small imbalance that we just created, it just doubled over and it hit the consequent encroachment of that gap. Will it invert this gap? Right? Will this gap be in an inversion? How would we know? On the 5-second chart, I noticed that we just popped up and hit the inside high of that candle right as we trade along the consequent encroachment of the gap. If we did, then I would like to pull it forward further because we may not utilize it now, but on the way down, and I do believe that we might be moving down after this point, but on the way down, we would probably utilize it then. So one of the great features of this is I can pull out my stop loss. Wow. And I can say, okay, $475 risk, right? Or I could take profit down and I could say profit, right? And this is one of the reasons why I like to use the lower time frame charts. On the lower time frame charts, I can find tighter entries when price seems to be moving in the direction that I would like to see it move. I'm watching this 1 minute candle to see whether or not we begin to break to the downside right here. I didn't see any clear signs of market structure shift, right? Did you? Did you see any down close candles violate the prior range of bam? Did you see any down close candles violate the lows of any of the prior down close candles on any of the time frames, even the low time frame? If we did, then this would be the first time, right? This would be the very first time. And if this is the first time, then I'm not going for the first one. I can't go for the first one. And that's one of the issues that I've been having is I'm going for the first one. I'm going for that first move down that says, "Oh yeah, we're moving down." Hmm. Now this is aggressive, right? This is an aggressive move down. It's just again, I did not see market structure shift. The only down close candles that I saw was this one right here, when this candle closed below that candle. That, my friend, is subtle. That would be very subtle because it would have me hesitating and kind of like, what? Like offside, like what? Okay. We have 8 minutes left in this 15-minute candle, and that's quite a bit of time for this 15-minute candle to go through its lifespan. 2 minutes and 50 seconds left on the 5, and this up close candle imbalance. We trade down through it. Where do we see us? What's the word I'm looking for? Retest this gap. Where have we retested that gap? Maybe I have to go down to as low as the 15-second chart to see if there was any retest. Remember where I said, oh, we dropped down inside of this level and we traded up and tapped, and then this is what I was referring to. That tap move could have been a very, very good entry. That tap move could have been a very, very good entry. But is that the move, right? That lower time frame, right? 15 seconds. I'm looking for the confirmation on the higher time frame. I'm looking for the higher time frame candles to give me their green light because there's a lot of wicks that are going to be formed. All right. Wicks meaning as price moves down, price is going to move up to validate, right? To either validate or invalidate our bias. And if it's going to move in the opposite direction to validate or invalidate our bias, then we can't just put our entries and our stop loss in those positions because it's gonna come back, right? It's gonna come back to um if this is the 1 minute order block, bearish order block, where's the mean threshold, right? Where's the retest? Where's the test of the mean threshold? Where is the trade to the up close? If that's what this is, right? Because it has to happen because that's the way price action works. There, unless it was Monday, unless it was Monday. So because Monday was one of those rare days where you would have, you saw it. If you know anything about trading, you saw it. It was one of those rare days where price was going in one direction. It would close and open in the same place, and the next candle would close and open at the same level. No retracement, no pullback, no let me go see what the order block has to say. It was just go, 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 and then come back, 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 back. And that's just not how price operates. Price does this, right? You see this little wiggle as how it moves back up. Now, what did I miss here? You tell me what I missed. What am I not seeing? Because it seems as if price has changed directions, but I don't believe that it has. All right. Yeah, because I'm looking to be patient at this situation, but I do not believe that this is what I think that it is, and it could be. Why? Because look at the level where we're trading again. That was that 4-hour high. That means that on the higher time frame, we've moved above these levels. Now we're back below these levels. Now this is the old 4-hour high. Let me show you where the current 4-hour close is from the last candle. I did not update that. This is the close of the last 4-hour candle. This is the pre-market 4-hour high. This is the preview. This is our current 4-hour high. Let's update these things, right? So we'll see what we're dealing with. We ran above that 4-hour high. Boom, we took the high out, and then we dropped down through the wick of the 4-hour candle. All of this is the wick of the 4-hour candle. Now we've turned and we reversed, and we're pushing back up to the opening price or the closing price of that 4-hour candle. Ooh. Right, because what? Because you see my issue now. My issue is we're at a very sweet spot, right? Because that's the high of the wick. This is the close of the candle. Now we're inside of that 4-hour candle, and this is the type of thing that I would think to do, right? This is what I would think to do. I would think to move my stop loss down to some reasonable level of risk. That's $1,000 right there. That's a little bit richer than my blood would like. Even if I went to the lower time frame, I don't see any reasonable amount of risk that I would like to be involved in. Come on, press up, press up, press up, press up, press up. I think I'll need to go to the 30-second chart here. if I moved my entry to about here, right? If I move my entry to about here, that's reasonable, right? This looks like a market structure shift to me. A low and a lower low. Will we get a higher high? Right? Will we get a higher high? We have 2 minutes and 40 seconds left in this candle. Will we receive the higher high validation, or will we just go low, lower low with the imbalance here? And I would like to move this without affecting anything else. See, between the low of this candle and the body of that candle, that looks like a sweet entry right there. My concern is what? Yesterday, what we had was low, lower low, boom, high, lower high, higher high. Man, I feel like we are in the spot. Am I missing it? Well, I don't want to chase it. I don't want to chase it. What I need to do is I need to begin to watch this up close candle, because if this is it, my entry window, then nothing should violate this up close candle again. Did I talk my way through it? I talk my, because it's time, right? It's the right time. It's the right time. Mm. Come on, buddy. What you want to do, buddy? What are we gonna do? 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 On the 5 minute chart, that looks beautiful, right? The way that we traded into the body of this candle and then just rejected it and moved to the downside. But it's just the range is so long that that was already just already just already. And then on the lower time frames, I can't really even see a good place to even try to put an entry. Maybe here on this on 30-second chart, maybe we would come back to the small imbalance and touch it. Yep. So my eye was high above this level here. My eye was thinking, you heard what I said. I'm thinking, okay, well, maybe we might run this high again, right? We might take that out in order to hit the mean threshold of this level. But this line right here, this is exactly the intermission between the discount high and the discount low. So we closed where discount high is the premium, discount low is discount, right? Premium and discount. Price is coming back up just to say hello. Just to say hello. I wonder if there's anything in this particular candle. There's a small imbalance here. That's the low of the up close candle here. Now it's 10:15 a.m. and now I'm targeting lower time frame candles. I'm really zeroing in on the lower time frame candle. Now, I don't know if that's what I should be doing right now. Don't know if that's really what I should be doing. Because we're below, right, that level. Is there an opportunity for us to run to this high of this gap as a wick, as a wick retest or something, as a retest of the gap high and then dump? Well, there are two wicks in this side of this candle. Bodies are failing. I'm gonna start moving. I'm gonna start moving stuff around because I don't want to. I don't want to market in. Spread is too crazy to market in. Either you're gonna position yourself effectively and let price come to you, or no. We're up above that level. Come on. Wait. How deep are we in the 5 minute candle? 2 minutes and 47 seconds in. And immediately I make my entry and it goes to where I thought it might go. Ooh, catch your breath, boy. Catch your breath. Right? So it lingered just long enough to convince me that that's all it was going to give me. Then it ran to the high of this gap. I have to catch my breath because it's just, that's just the way it is. I know a lot of people say, man, you just take your trade and da 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 da. Man, look here. So I'm watching this lower time frame stuff here. Let's see if we keep going. Ooh, we. And I just think it's so interesting how it just seems to me that the market itself, stop loss, the market itself is very effective at um grinding down the trader. All right, so we just traded off the high of this candle. Mhm. I want to see this candle respected, and it was, at least on the 30-second chart. And my entry was here before. Hmm. I moved in to get the trade because I didn't want to get left out if it traded from this gap here. If it traded here, it put 2 wicks in. The body of that candle closed below the uh, consequent encroachment of that gap. And then I was like, yes, I want to get involved. Hmm. We just took the high of the prior up close candle. Okay, a few more minutes left in this. Just traded to the past the opening of the prior up close candle on the 1 minute. Again, I noted this is the time of day, right? This was the time of day that I was looking forward to see price run to a particular level, get to that particular level, and then begin to deliver lower. So I really don't really feel bad about that trade. I do feel bad that I was stopped out. And the word bad means that I am actively considering how I could have traded that better. Notice I have not immediately re-entered, although we're at this level. Right now, I'm again considering what I said before, that I kind of ignored once price began to do this, is that this was the first push down here. Perhaps we were going to run this level, go to the mean threshold of that up close candle. Once we traded just a little bit above mean threshold of that candle, then price was going to begin to do what it was supposed to do. Looking where these candles close on the 1 minute, it's still giving me the idea that this is the level that I should have been looking for, or that I should be looking for. Mm. Mhm. Mhm. Okay. That's and this particular delivery is basically all I wanted, right? This is yeah, this particular delivery from here to here was basically all of the range that I really wanted. So let's see if I can go back to the process, refer back to the process, step one, all the way back. See, we came down through this imbalance. We traded up to the low of it, then we went lower. Mm, 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 mm. 10:23 a.m. What? What? I wonder if we're gonna keep going up till the FOMC minutes come out. Right? That'd be crazy. Just moved above the relative equal highs on the 1 minute chart. Okay. Let's see here. Moved in the premium from this short-term range. This short-term range premium. If we're in a 15-minute consolidation range, where the 15-minute charts consolidate, 15-minute candles consolidate, or for a while, it's gonna be very difficult price action to deal with. Yeah, it'd be very difficult price action to deal with. Ba, 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 da, ba, da, 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 da. Hmm. 1, 2, 3. 1, 2. Crude oil prices just came out. Well, they're coming out in about 5 minutes. I'm not sure crude oil prices would move the market, but yeah, they're about to come out. I turned my head for like 2 seconds, and all of a sudden I look up and the candles just rolled over on us. Mm-hmm. Come on. Mm. You take a trade after you've analyzed, right? You take a trade after you analyze. And one of the things that I noticed before I entered that trade is that um, I don't know. It's not that I had a good feeling because I think that anytime you take a trade and you trade it long enough, you always have a good feeling like, oh, this might go against me. I mean, that's not an unusual feeling. Are we going to invert this small little area here? Just drop right into the gap. May scalp this out if it goes my way. No, no, short term gap held. That's two trades, and I am down a considerable amount of money. Oh man, and then it goes my way. I mean, that's just It's just delightful. That's just delightful. How far off the end of this wick? How far measure this wick from here to here. How far did we go up that wick before it dropped back down? So if I did that here, right? How far up this wick could it go before it goes down? No, seriously. And I did, yes, and I did get stopped out right here before it came down, which is has its own level of frustration. That's fine. But I'm looking to see in this type of a market, where should I be placing trades? I like I like this price, and maybe that's what I should wait for. Another up close candle that will give me something like that. Mm, because the only safe area with this well, actually with this 1 minute candle, I'm not sure exactly how many times we went above this after we came back below the close of the prior up close candle. Mm, I think I'm done for today. I think I'm done with this. Look at this. Right? Look at this. We'll look at it. We'll look at it on the 1 minute. Right? Look at this. I think I'm done with this trash. I don't think I want to trade this. All right. Or I'm gonna sit and I'm just gonna read price action right now. Just read it and see what it really says. Because if the market remains like this, mm, excuse me, if the market remains like this with these ranges, then we're gonna have to make the adjustment to be able to get in. If the wicks alone are this wick is $30, right? This wick moved to $30. It moved 20 ticks, right? Something like that. That's not what I want. I wanted this to go from here to here. This wick alone was 171 ticks and it moved $40 on the 1 minute chart. If that's going to be the case, then where are we trading, right? Are we really have to do we really if we're going to do this, are we really trading on like the 30-second chart so that we can start to see candles that form in a reasonable size wicks? Let's see on the 30-second chart, this wick is 24. Okay, that wick is 24. And if that's the case, then the 30-second chart becomes the new 1 minute chart at the minimum. At minimum, this is what we would need to look at. Then we could take our levels and we would pull that forward. And then we would say, look, we dropped down to the mean threshold of this down close candle once. We came down near it here and we moved back up. But does that mean we're bullish or does that just mean that we're still running for this level here? Right. Yeah. So I think and I hate to say it, if you don't have the lower time frames, access to lower time frames, the 1 minute candles are giving too much range. Period. The 1 minute candle is giving too much range. Um, let's see. Let's want to kind of remove some of the things here so we could give a have a clearer look at the price. See the small imbalance here. Then we moved up. On the 2 minute, these three candles are the first three candles to close below these two. There was a small gap here. Now price is struggling around in this consolidation. It has a lot to deal with. That's a lot to deal with. That's a lot to deal with. I don't really want to go hands off or go offline right now, but you know, we'll see what we can do. We'll see what we can do. Because it's still only 10:30 in the morning. It hasn't even reached 11 a.m. yet, right? We still haven't reached 11 a.m. yet. Then right above us, we still have the 15-minute consolidation. Now we were in the discount at that level, and we could have very well left. But instead of us immediately leaving that discount level, we came back to it and we retested it. So we traded into it. We hit the what I like to call it intermission. That's just the level between the discount high or discount low. It's also the level between premium high, premium low. It's just intermission. Because you can't call it consequent encroachment, right? Because it's not. Consequent encroachment is the 50% level. So now we have this strong push up toward well, we're at the intermission again, and we're still in the discount low of the 15-minute closed candle to the left. This is the area where where I placed. Man, I'm glad we can record the rewind this. This is where the area where I began. Like, man, could we come way back up here to right? Then I don't think we're gonna stop here, right? If I had a crystal ball, and I don't, my tested theorem is that we would attempt to touch or at least go through the mean threshold of the 15-minute candle to the left, just to get at least get close to it. That was weird. See how the candle just flashed like that? Mm. Mm. The eye is here on the 5-second chart. There's a level of diminishing returns here. This one 5-second candle is still um 15 handles, 61 ticks in that one 15-second chart candle. So it doesn't really matter when the market is this volatile. If you go to the lowest time frame you can get to, there's still a lot of range for placing stops and for placing entries. I think the only thing that we could really do is like this highest up close candle right here. If I were to place a short, it would need to be inside the body of that one particular candle, just below mean threshold of it. If I believe that that would be something that we would look to trade, because the candle could just run up across this entire gap, hit that level before we start moving down. And the only reason I'm saying this is because I'm reading the lower time frame, which is going to give us like this down close 5-minute candle. We still aren't really seeing much by the way of price moving outside of this range. Between this high and this low, we're still moving inside of this range between the high of this low. All of these lows down here are in the discount of that range. Now we've moved into the premium of that range. We're still in that box, right? We're still kind of locked in and locked into that level. Yes, I did make a noise sound with my mouth as if I was a transformer or something, but it is what it is, man. You do what you gotta do. Pull this forward. This is that level I was just describing how we drop down into this level. All of this is in the discount. Most of it seems to have traded off of this down close candle. Once we moved up, we kind of traded off this down close candle. Now we've moved to the upside, but it isn't providing us any long-term direction at this point. We're just oh, we're just watching the candles fill up the screen. This is a 5-minute chart. Mhm. We finally broken above this up close candle. We turned over, dropped down into basically the consequent encroachment of this overall range. Now, does that mean that we're going to stay in the premium? Or does that mean that once we finally close at that level, now we have permission to turn over and move down and go back into the discount? Mm, we are at equilibrium in this range. And we move below that level. And now with that tiny little gap we saw earlier that we just moved past, we drop down to the premium of that level. And now we put a little wick into the discount of that level. I'm not interested. Nope, not interested in any equilibrium trades. Equilibrium trades are great and they deliver very well. Problem with equilibrium trades is you can't tell which way they're going to go. You'll see us come to a level like this, and it seems at equilibrium we decided to, but we go below it, then come back to it, then drop below it. Oh, does that mean that well, I'll give it time because of the equilibrium trade. In the next 42 seconds, we could be back in the premium. And they just wanted to run down below equilibrium, dance around, and then get back to business. 22 seconds left on the 5. Last 10 seconds are going to tell us the whole story. 10:39 a.m. That's consequent encroachment of that 30-second gap. And price is dancing around. Again, you can't market into anything like this. It's literally moving 50 point. It's literally moving 10 to 30 points every 5 seconds. So if you decide to click the button and and then your internet speed is not fast enough to get you involved in the trade, or if there's any glitch on the other end where they can't seem to get you into this trade, you're going to click the button a short here and it's going to get you short. It's going to get you, you're going to click short here at 36 and it's going to get you in at 26. It doesn't seem like a far range on the screen because it's not. Mm-mm. When we rolled over and we hit consequent encroachment right here with this tick, the first thing I thought was buy. It said think, right? And it looks like a tiny little fair value gap, and then we move above it, and then we drag you tick, and then no, but then it went completely short at that point. But now we're right back into this range, and we are bouncing back and forth. Price action is doing its dance. Price action is doing a dance today. It's just up and down and up and down and up and down and up and down, forward and back, up and down, forward and back, forward and back. Yep, that's my hey, distract yourself. Uh, yeah. And the other day I called Ross Cameron a breakout trader. He's actually a momentum trader, right? A momentum trader is different. So breakout traders, they watch for price to break out, and he does well he as does he. But in that small cap, mid cap world, news gives price direction, bias, and energy, and then that's what he looks for. That news to break and then to send price. Now, all of a sudden, the futures market has become very similar to that, where the news catalysts are driving price crazy. I almost did it. When I saw this move, I was like, "Oh, I'm buying that." It was something about the way that we came into the closing price of this down close candle. When we came to the closing price of this down close candle here, boom, and then we left it, and then we started to price up through this imbalance. Something about it was saying to me, "Hey, man, go ahead, buy that." You know. Now let's see what that impulse would get me. Stopped out because this is the area where I said, "Oh, I'm gonna buy and put my stop loss here, safety, right? This is $100 between here and here, right?" Jum bum 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 bum. Jabba lubba lumpa slow. Slumba lumpa dum ding ding. Step a dick a ding ba dum bum bum bum. Boom. Dum 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 dum. Boom. Mm. Ah, guys. I trade 2 minis a day. I think I'm gonna switch to micros. Only thing I don't like about switching to micros is that none of my charting crosses over. You would think, yeah, you would think that the mini chart and the micro chart lines up perfectly until you try to copy your graphics, or copy your boxes and your lines and stuff across. Nope, it's not the same. We're down below this imbalance again. We just traded up to the low of it. We traded the consequent encroachment of it. You see how it became a very narrow range? That last touch of consequent encroachment. A nice little run up. Second. Telling the market to hold on, it won't slow down. I said slow down. Profit. Stop loss is here. It's crazy, right? I, it's crazy. That's crazy. In the 1 minute, I don't really see. Um, oh, it left us too quickly. Boom, and then sell. That was it right there. That was it. That was it. Oh man, that was it. Just boom, and then sell, and then that was it. And then we're in. And then we would look at the chart, and then we'd say stay in, and then we would be out. I checked out trade by Matt's video the other day, and he made a great point. He's like, some people, this is their very first experience with the markets, and their very first day was the very first um, experience. That's the word. Their very first experiences with the market is this. They'd say, "Oh yeah, nobody can do this," and I am about to say the same thing. This is crazy, right? I'm about to say the same thing. This is ridiculous. This is absolutely ridiculous. Because normally I see um consolidation as this slow slosh back and forth, right? And you look at it and you see it's going this way. Oh, now it's going that way. Oh, no, it's going this way. And you want to see something that's really, really interesting. See what my short position is? That's a problem. Looking at this overall range, looking at where the high ends of these candles are, my short position should not be at the low end of a down close candle. It makes no sense. Why? Especially on this time frame. We also have the open of the 5 minute candle and the close of that 5 minute candle. On the lower time frames, the 2 minute and 3 minute, we also have those levels that price could trade to. So yeah, you can getting short down in the low end of a range like this, that's breakout, right? Breakout is we're waiting for price to finally push below this particular range, trade back up into it probably, and then move away. That's kind of like breakout. Now, look at this little imbalance right here. You think they're trying to sell us wolf cookies here? You think they're trying to get us involved in some delinquency? I'd take a piece of this action. I don't need to move the stop loss. In fact, we're gonna go ahead and move it down to 40,000, 4,500 right there. And that should be a good exit. We traded to this gap. There is the opening of the 1 minute price. $200 risk. I'm a little disappointed that we didn't hit the main threshold of that 15-minute candle. Right, but for now, and I would love to see that. Still looking for it, but the 5 minute candle is melting at this point. What time is it? 10:49. We're beginning the macro. We're beginning the macro. We're beginning the macro. So we're beginning the macro right now. Then what are we looking to see? If we're going down, I would love to see the macro take out that level of liquidity that's above us. Let's go ahead and take that out, and then we'll get low, and then we'll move away from this point. Now, the idea that we're moving down first tells me what? It tells me that the macro could bring us back up hmm, to some gap or some PD array because we spent all morning moving to the upside. What do you think about it? Hmm? It's like, dude, while you're looking over here, the market is just collapsing on you, buddy. I mean, but look, the macro. He's screaming out the macro. But look, the macro. They say don't chase price, but the weird thing is this market says you have to be quick. It's like, no, don't chase price, but this market's like, you better be quicker than that. Like, God, leave. You want from me, market? God. Do you want me to be accurate, precise? Do you want me to be calm, or do you want me to look at a 1 minute candle that if I do not enter precisely at the exact moment, the exact place, and have $5 million worth of drawdown available? What are we talking about here? You see how price is delivering now? That last move to that gap right there belies everything else that we saw before that. Everything we saw before that, it was like, oh, but here at 10:45, we ran into that gap and we're all screaming out, oh, the macro starts in a few minutes. The macro began, and by the time we thought, oh, the macro should start, look where we are, and it just happens like that. You're waiting for a particular time, and price and time are happening together, right? Now we are at 10:52 a.m. 10:52 a.m. So, did we really validate this as a market structure shift? I think that we did. Did we really want to go through all of this trash? No, I don't think that we did. I don't think we really wanted to go through all this trash, but we really did. The low of that 15-minute candle, was it touched right here by this wick? Yeah, it was. Now, question is did we really utilize that 15-minute candle effectively? Right? Did I really utilize that 15-minute candle effectively to ignore all other entry opportunities? I don't think that I did. I think that this gap in the low of that 15-minute candle being in the same location is not it's not coincidental. I think it's just difficult for me because if I bring up my entries, this is the exact same spot. Think about it. It's the exact same spot. I think I attempted to get short in here somewhere, right? I believe that I attempted to get short in here multiple times. This is not far off from where I attempted to get short. It's just that I did not utilize this massive PD array above me as my target area. What did I say was going to be a problem for me in the end? What I said was going to be a problem for me was equilibrium. Taking trades in the middle of this range. This trade is would be better above the middle of the equilibrium range. And that's one of the things that this this type of price action does visually. This type of price action visually brings you into the equilibrium range. And that's why we oftentimes get stopped out because it doesn't bring our eyes to the periphery, right? It doesn't bring our eyes to the high of the premium or the low of the discount to make a trade in either direction. The way the consolidations do is it's almost like this is like an arrow pointing to this level. This is like an arrow pointing to this level. This is an arrow pointing here. And then you see, and it's almost as if that's like an arrow pointing to that exact level. These are pointing to that level. And so it's bringing our eyes into equilibrium. But Grady, that's where a great entry was. It really wasn't. It's very deceptive. But if this was the entry, if this was the mwah, chef's kiss premium entry, then then what? Then there would be nothing above or below it. That makes sense, right? There would be nothing above or below it if it's chef kiss premium entry. The only thing that would be above it would be the PD array that it's sourcing. Swing high, swing high, swing high, swing high, swing high. Now, what was I trying to do? I was trying to get short, trying to get short. But what was I not able to do? And it's almost like, well, Grady, haven't you given up on the trade? Well, pretty much. And I'm gonna tell you why. Because this range, I can't. There is no level except where I am right now. See where I am right now? That's as much risk as I would like to take. This range is literally $4,000 worth of risk all throughout here. So if you divide that up, this is $1,000, this is $2,000, this is $3,000, this is $4,000 worth of risk in that range. So no, I'm not interested. What I'm looking to do is I'm looking to get involved here or looking to get involved here or this area. This area was a beautiful area. Why? Because the way price went to that area, said, oh, look, there's a gap. The way price went to that area and then moved away. That's exactly what you want. What you really want is this. Who is you? Who is you? You is me. You is me. We is us. As I would like to put my there, and then I would like there, and then that's it. $270. This is the risk I was looking for inside that imbalance. Boom. Well, no, not exactly on that high because I believe that would stop me out. I'm looking for that. There's really nothing above this, right? When I say nothing, I mean we're not in this right? We're not at equilibrium. We're not in the equilibrium range. When we began this process, I did believe that something was about to happen. There was too many retouches, too much activity in the same localized zone. And we can see that on the 5-second chart. We could see that on the 5-second chart, how we were becoming very precise, right? At first we were like all over the place, then precise and accurate touches on this gap. Exactly to the gap, exactly to the gap. It's right near the high, right at the lows, right at the low, right in the middle of the gap, right at the exactly in the middle of the gap, right exactly at the low, right exactly at consequent approachment, exactly, closing exactly, closing exactly, right? And so we began this very precise touching of this level. Then we ran right up here. 1, 2, roll over, touch my shoe, 3, 4, go to the floor. Makes no sense. But that's exactly what we did. And a beautiful delivery to the downside. Now we're at the 4-hour close of that 4-hour up close candle. So all of the consolidation that we just experienced happened right here. Close it at 4-hour candle. All of the other activity happens be inside of the wicks. Then we've just traversed the entire up close candle that was exactly to the left. Now, what do we have to deal with here? Right? And what do I mean by that? I mean, now that we have established this, then we are looking for the close of this 4-hour candle. But this one just opened, right? So are we gonna continue all the way down to where? Here? So this could reject, this could reject. We've already come into the opening price of this 4-hour candle. Let's go to the lower time frame. We're down below the opening price of this for a 2-hour candle. That's lovely. What we would attempt to see is price just go ahead and break away now, or are we going to see another attempt at the 2-hour high here, a 2-hour close? Sorry, another attempt at the 2-hour close, which means that price will drop into this level, drop down lower here. We hit the wick of this up close candle. We would pop back up to the 2-hour close of this candle, meander, begin to descend. That's probably what we're looking for. We'll go to the 1-hour chart and see if more active price action. Oh, that 4-hour close, we're down below the 4-hour closing price, which means that just as we would normally do and run to the close of a candle, we could ascend to the 4-hour close. Is that the area we just touched? Where is the wick of that 4-hour candle? Don't want to lose track of it. Here's the wick of the prior 4-hour candle. I don't know. I don't believe that would be a significant area to run again. So we ran this high on the 4-hour here. We even closed above it. Then we went there. Now we are moving our way back down. There's the 4-hour close level. There's the mean threshold. This is a very long candle. So getting to the mean threshold of this candle would put us there, right? So that's the mean threshold of 4-hour candle. And that becomes effective when we drop below it. I'll make the candle red. That'll become effective when we drop below this candle's high to low. Now, we could probably take in this total range, but I believe this low is lower than the prior low on this candle. So this does encompass both candles. I'll go to 2-hour chart. No, I don't want to leave this out here. No, get rid of that. And I have what I want to see marked out. Then we'll go down to the low. Now we'll probably become more apt. Now we just turned over, ran up. Do you think that I could get involved in this trade, Poppy? You can if you believe, Pinocchio. Do you think they'll stop me out, Poppy? Well, Pinocchio. Odds are yes. If you don't hit sell right there and just take the money, buddy. So we're down. There's mean threshold, and I think that this is honestly this is what I believe I should do. I should just go ahead and I could just go ahead and just drop this down here for the rest of the day and just let it go. This range, do you think that's a breakaway gap? Does that look like breakaway to you? We've already retested the 1 minute here. We're in the mean threshold of this up close candle there. You know, there's 6 seconds left in this candle. We tapped the 4 hour close and immediately descended for. Oh man, come on, man, that was just beautiful. That was beautiful. That was a beautiful trade, right? 175 ticks, 43 handles. That's just a good day. That's a good day. Circus, circus. Yowzers. We're retesting the closing price of the 1 minute candle. Beautiful. There's 55 seconds left in the 5 minute candle. There's a 5 minute gap up above. Will we enter that gap? Is it breakaway? Bottom of this particular box is the low end of a 15-minute candle. That's the low of 15-minute candle. We just tapped the low of that 15-minute candle. $4 minutes and 58 seconds left in this 5 minute candle. Mm-hmm. That's nice. Very, very nice. Where are we moving to now? The lows of the 15, the opening price of the 15-minute candles are sitting at 17,636. We just came very close to those levels. Mm-hmm. And I really, really, really would love to grab that price going down as we leave the lows of those 15-minute candles. Of those 50, yes, of those 15-minute candles. Is that a balanced price range? Moving up to this green line. We're at the lows of these 5-minute candles here. Small little gap right there. Here, there. Oh boy. Hold on, hold on, hold on. Don't do anything. This guy here is trying to smurf out justice. That's it. That's the sell I want. I just don't want it to come back up here and hit that. Let me get out. I do not want it to come back up and hit the high. This 1 minute candle. What I wanted is this. This is what I wanted. Here at the opening price of that level. Stop loss up here. TP down here. That's kind of what I was looking for. More along the lines of something like this. Look where we are in the wick. See, now I have to show the wick its proper respect because I haven't done that yet. I haven't respected the wick yet. The wicks are just unbelievable. That's probably the thing. Now we're back down here. 14 seconds, 1 minute. Oh, that's tight. 245. Triggered me in. We ran into that wick and then we dropped down. Five wicks to the upside is see. Will I see 5 wicks to the upside is the question. We saw 2 solid wicks to the upside. Come on, baby. 2 solid wicks to the upside. We dropped down and we closed. Well, yeah. Third wick. Third wick to the upside. Third wick to the upside was it. Uh, Third wick to the upside was it. Third wick to the upside. Golly. What kind of trash, Grady? Come on, buddy. Terrible. Okay, so the thing that I really want to be careful of is I just want to take a look at the short. The thing that I want to be careful of is I do not want to um uh, really get too emotional about the way that this trade right here, I missed it. And it's just one of those things where all you have to do is click the button and then you're in, but you don't do it and then it goes a long way. So it's just one of those things where you just kind of have to just absorb it. But the way price is coming back like this, I don't know what's happening. I don't know why I would do this. Because again, like I said, I'm looking at these bearish levels and I'm not giving it the consideration to think that it's going to run to the upside for any extended periods of time. This is a retracement back into the down close range. Was there any way to get into a trade in here? Is that what you're thinking? I want to see what the stop loss was in this range, $300. TPs here. You see how my stop loss, my entry is there? My entry should have been there in the middle of that. and then I'll move my stop loss out. 20, see, 38 seconds. I want to see where this next candle closes. I've already overtraded today. I've already overtraded. And really my issues, I'm down $1,100. And really my issue is I it's not my bias. It's not that my bias is wrong right now. It's not that my bias is wrong. It's probably two things, if I could say. Well, one of the things is I probably have too much leverage on by trading the minis. Number one. Number two, um, if I were trading micros, I could open up my stop loss. And well, I would still be in the same position because many of my entries were run by a considerable margin. So that didn't make a difference. 1 minute and 45 seconds here. 11:15. Probably should be off the charts by this time. Down 1,100. Max drawdown for the day is what, 2,000, right? And I have been just stopped out narrowly in just some very good positions, and it's just not. I'm not in the wicks. All right, I'm not in the edges of the wicks today. And today is one of the days where if you want to have a decent trade, you need to be 50% or more in the wicks of every candle that you're seeing. If you see this candle, if you see this candle, like this candle, if you see this candle, my entry needed to be above 50% of that wick. If not, no. Nope. 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 There's plenty of liquidity in the wicks today. It is not in the bodies. It's not at consequent encroachment. It's not the mean threshold. Well, this is at the mean threshold. That looked like mean threshold right there. If I did this one candle, right, that's right near mean threshold. So yeah. So like for me, if I wanted to get into this trade, I would have to find the middle of this wick. My stop loss would have to be here. And that's it. Boom, right there. That's what my entry price was. Let's see if we push this gap all the way through. That was the low of that candle. My stop loss was there. Mm. What hurts more? What would hurt more? What would hurt more? That, yes, that would definitely hurt more. Or not selling and believing that that was the proper entry. That's one of the difficult errors or areas. That's one of the difficult areas of trading that I struggle with more so than anything else. People, ICT is like, yeah, I miss trades all of the time, and I just let them go, and it's cool. And I'm like, yeah, that's great because it's very interesting to have a success track record, which is what we want. We want a success track record, and we want the money. Boom. He said he thought he said something right there. You see that? You see how he thought he really said something? Like he's like, oh, he's really talking. Really running his mouth today. Okay. Yeah, 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 yeah. Mm, 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 mm. We might run these highs. I'm not sure. I got in with a micro, no TP. We could get stopped out on the micro, but it's just so much less risk than a mini. It's just one of those things where you on a mini, and this is something, man, this is something for on the mini. Sometimes you can see the price easier on a mini. I'm not saying this is going to be a successful trade. I'm just saying sometimes you can just see price easier on a mini. You would look at it, you see it, and then you go after it on a mini in a way that you can't do oh, no, I'm sorry, on a micro in a way that you would not normally do with a mini because the risk is so reduced. Then you can say that looks like the entry that I want, and then you'll go ahead and you can take it if you wanted to. If there's a minute and 51 seconds left in this 5 minute candle, what am I also thinking? I still think that we were going to hit the opening of the prior day. I still think that we were gonna take this high out and hit that before we went down. It's just lingering in the back of my mind. And every time I would think, "Oh, I'm gonna get short," I'm sitting there thinking, "Well, we haven't hit the low, that daily low yet." And look at how price had been running all day long, and all of a sudden at this point, it just slowed down to a crawl. Is there news coming out now? Is there news coming out? Nope, that's not what I wanna see. I wanna see trading economics. I want to see the calendar. Log in. Dang. Okay. Am I human? Am I human? Choose all of the buckets. That looks like a bucket. I'm not quite sure if that's a bucket. That looks like a bucket. These could be buckets. That could be a bucket. What? Incorrect. I'm not human. Okay. Choose all the buckets. Bucket, 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 bucket. Let's do this. Bucket, 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 bucket. That's unfortunate. I mean, the FOMC minutes gonna come out a little bit later. And then the way this trade is sitting here, and it's not going down. That does not encourage me to think that it's going to go down. The way it's just sitting here, I like this up close candle. I thought that was a great thing. I did not want to see it go up above the opening price of this candle because it has me thoroughly upset and confused that price could go ahead and break down at this point and then turn right around, come all the way back up, right into the to OTE. I'm gonna raise my stop loss up, which is something that I'm doing only because OTE is right there, right? That's a 70% retracement. Came back in, we touched the 70% level, and we pressed through that. Now, if we run through all of this, I actually might think that we're bullish. I doubt it. No, I don't want to move you. Control Z. Now we've touched the 70% level. What do I want to see us do now? Go down below 62, touch 62. They'll go down below 50, touch 50. Go down, blah, 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 touch that. Keep on going. Mm. Rule number one, if at any time while you're trading, You start begging or asking the market to do something or asking a higher power to do something, or if you start to any sort of a pleading or when you start doing that, then you realize that something was wrong with your analysis from the very, very beginning. That's a hard lesson for me. That was a hard lesson for me to learn, but it's true. When I'm not looking at statistical levels and I'm not looking and I'm like saying, "Oh, please, 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 please," then something was wrong with the analysis from the very beginning. So if you find yourself doing that, just go ahead and say, "Oh, I've already messed up. There's something about what I did when I took this trade, I've already messed up." Yes, that's how you know. We're down below 62, but I want to stay down below 62 now. We left 70 and we ran down below 62. And what am I referring to? I'm referring to this range. Nope, 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 nope. No, 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 no. I'm referring to this range. And I'm also blocking the chart because I don't want to see if we get stopped out yet. So I wanted to get down below this 62 level, then move down below 50. We tap that OTE 70% retracement level. But notice how price has all of a sudden slowed to a crawl. That's crazy to me. We've been flying all morning long, just flying back and forth. And I guess this is going to be the slow pain for me. Yeah, I guess we're going to get slow pain for me. But look at the amount of risk that I have on now as opposed to what I was risking with the minis. This is tolerable. My account can tolerate this. I could take 10 trades and I would only be down $500 of 10 trades. I mean, is that something that I would want to do? Nope. I mean, we've already seen this is my third or fourth trade today. And did I take the trade again in the exact same spot? Right. It's just, and I'm sure a lot of traders did. A lot of traders when we got to this spot, a lot of traders like, oh yeah, it's a good spot. And it's just one of these areas where, as they call it, is a psychological level. Huh? 17,427 flat. It's like a flat number, right? Mm. It returns to 19,427 flat and touches that level to the tick. On the 15-minute chart, this is the 15-minute high. This level um that level roughly, we're roughly near the 15-minute level high. Sorry, I keep saying high. I mean close. The close of the candle on the 15-minute chart. There are 3 minutes and 38 seconds left in the 15-minute candle. Mm, 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 mm. That 15-minute high is also the high of the hourly candle. But we have quite a bit more time left in the hour. We have 33 minutes left in the hour. Just quickly returned to that closing price. Mm, And then the problem that I'm actually looking at right now is not the it's not that we would be breaking out or moving up from this point. It's this. It's this, right? The closing price of these up close candles is here. And right now, we've already probed these wicks like 15, 20, 30 times, right? And in order for my stop loss to be safe, this is a 15-minute candle. In order for my stop to be safe, it would need to be up here in these wicks. I could go to the 5-minute chart. On the 5-minute chart, this is where we are. We've made a 70% retracement of the candles from the low to the high. Now we're looking at 2 minutes left in the 5-minute candle. Well, you're saying right now the candle looks kind of bearish, right? It kind of does. And again, I am still believing that we're going to use those higher time frame candles in order to send us just a little bit lower. It seems as if we've already been respecting the up close candles to a greater degree on almost every time frame. But it doesn't mean that we won't run inside of those wicks. We run up into those wicks and do business in those wicks. 1 minute and 27 seconds left on the 5-minute candle. Mm-mm, mm-mm, mm. For a second there, I just saw a glimmer of possibility, glimmer of I guess we'll call it a glimmer of probability. I just saw a glimmer of probability as we move down below this up close candles um opening price. To see us stay below that candle's opening price would be very, very encouraging at this point. For 42 seconds left. Now, the last 10 seconds of this 5-minute candle, the last 10 seconds are going to be the most important. This is the 5-minute candle dilemma. In the last 10 seconds of the 5-minute candle, this 5-minute candle can become can become a bullet 5-minute candle with a wick as long as the body is right now in the last 10 seconds. What we would prefer is our preferential what's the statement? Our preferential, this is what we would prefer. We would prefer this candle to come on down here and really get down. New 5-minute candle, and we open below our entry and below this up close candle. We want to see this up close candle respected. If this up close candle is respected, then what we need to do is we need to sit tight. We're not going to make a lot of money today. What we would like to see is we would like to see a decent delivery to the downside, going into FOMC minutes. But we cannot believe for a second that that's going to be an automatic outcome. We can't believe for a second that that's going to be an automatic outcome. Only thing we can do at this point is just say, okay, well, we're down below this 62% level. We hit this OTE, now 62, now we're at 50. Now, because we dropped back and hit this 50% level, this is not normally what I would expect to see from hitting the well, actually, what I would expect to see is a strong delivery to the downside at this point. Why? Because we did this range, 0. No, that's not how it works. What happens? What happens? What happens? Normally, when after price hits the 70% level, it drops to 25%, comes back up considerably, then delivers to the downside aggressively. And the problem that we're having here is that this seems to be holding up at this point. We seem to be holding up. And yep. So now, this is the pain of patience. This is going to be the pain of patience. The pain of patience is right now. I could take a psychological, moral, and emotional victory by taking by taking a $33 profit on a $1,100 drawdown. And if you trade any for any time, you know that those two numbers are just about the same. The real difference is when you say, oh, the difference between 10 grand and $100. Those are the really the differences in the market. Yeah, you could put on a trade, and in 10 minutes you're looking up, and it's up $5,000 very very quickly, as you've seen in the last few days. Or just like with drawdown, right? You could take 3 or 4 trades and be as far down as you could be up, right? So those all of those numbers are roughly the same. So this 5 minute candle just ran down into the body of the one that's below it. And I don't want to see this down close candle act as a bullish order block. I don't want to see it send price anywhere, even if it's going to send it higher to send it lower. I don't really want to see that. I really would like to see um, price action begin to melt and then kind of return to those ranges that we saw earlier today, right? Whereas minute by minute, the market is moving down, 100 handles, 200 handles, 300 handles, that type of price action. Well, so far so good. Now it's the watching game. Now we are in the watching game. In the watching game. So really I have no stop loss, but if I were to put a stop loss on, it would probably be here, right? It would probably be down here. And I would look at the 2 hour chart, and it would just be in the next couple of hours for us to come down below this up close candle, reject the lows of this up close candle to move lower. That's a big ask. We'll look at it on the 1 hour. On the 1 hour, we would just see it as a retest of those highs. And then toward the end of the hour, we would like to see price really begin to show us, yes, we ran up and we hit the opening price, started closing price of the 1 hour candle, rejected aggressively, and then continued lower. And the example that we're kind of looking at is something along this line, right? Something along this line where we ran up to that hourly high, and then we rejected and went down below the run of that up close candle. Now, do I think? And I don't think anything right now. I don't think anything. I did believe that we were going to be in a sort of a consolidation once we made this major rundown. I didn't think that the consolidation would be a large percentage of the total move. I don't know why that never registered with me. That when you have a narrow range movement, you have now a super narrow range consolidation. If you have extensive or wide ranging movement, then you also have wider ranging consolidation. But great, if this is consolidation, do you think that price would turn here in the middle and go lower, or do you think that we would? Now, I think that once we took this high out up here, once we took this high, we took this up close candle, and we made this move down, that we would retrace to like to the 50% of the range and then move lower. That's a weak estimation, a weak guess, basically right now. But we have to basically hold for the next 20 minutes to see where this candle closes. It's not. I mean, I'm looking at the hourly chart. But if I looked at the hourly chart, then it would be like one of those, hey man, set it and forget it, walk away type scenarios. And I'm not really gonna do that. Uh, If we move below these lows, I would move to break even. If we move below these lows, I'd move to break even. And so all of a sudden, the morning levels of price action thrashed about, right? Remember we was talking about, oh, it's dancing, it's dancing, it's dancing. You remember that part? It's dancing. Now this is what you would tell. This is the types of markets you would tell new traders that the market is like. You know, it's this with the meticulous entries. Yeah, I could have saved $1,000 by switching the guy. No, I couldn't. But I could have saved $1,000 by waiting till a moment like this. But now I feel like I'm watching paint dry. Yeah. Now I feel like I am watching paint dry. So it's not. It's if you do, if you don't, right? So these two candles kind of closed in a very equal range. What I do and don't like about this is this. These two levels are very equally low. There's this imbalance right here. Come on, trading view. Why do you, buddy? Boom. These two lows are very, very equal, and we just dipped right down below those two lows. That's the part I don't like. That's what I don't like. Nope, that's what I don't like. When we got down here, we were roughly about $200 into the profit. Mm-mm, mm-mm, mm. We're here again. Consequent encroachment, bouncing. We're bouncing at this level, but we're here again. It's important to me. Come on, baby. All of our price this morning. Well, now I'll say it like this because I don't think it's not really quite all of our price this morning, but most of the price this morning, we had this daily gap that we formed on I think I named it Monday to Tuesday. This is the consequent encroachment, a mean threshold. This is the consequent encroachment of the new week opening gap. This is where we are now. We ran to the high of the new week opening gap. There's one wick outside of it. Here's another wick outside of it. There's another wick, but it hits the low of that daily gap. Now we're back to the consequent encroachment of the weekly gap. What we're looking for is we're gonna put a quadrant out here. What I'm looking for are trend levels. Is you see this high is at the quarter level, and then we reject it back to the consequent encroachment. I do not want to see the consequent encroachment level at this gap act as support. I would like to see us pour down through it to this quarter level. This quarter level houses this quarter actually houses today's gap, right? So today's gap was formed. We moved up above today's gap. We tapped it. We ran up to the quarter. We rejected at the quarter. What we want to see us do is get down back to today's gap high and the gap low, below this quarter level, which represents 25. I'm call it the QT level right here. This quarter level. I'm gonna bump up the font just a little bit. Get down below that level, which is today's gap, the new day gap, and then go ahead and exit below this weekly gap. And yeah. exit below this weekly gap. And we're coming into it pretty healthily. This is a 15-minute chart. On the 15-minute chart, we almost close below this level. We look at the 30-minute chart, then we can see the closings on this chart just a little bit better. Okay. We notice that this candle actually closes in a discount of today's new day gap. I would like to take that as a signal. 5-minute chart, trading view is slowing down. On the 5-minute chart, we see that it's almost exactly the same. That we close just shy of closing outside the high of the new week gap. We did the same thing with the quarterly impulse. What I want to call this? The quarterly intermission, right? And then here we are at consequent encroachment, and we are just below consequent encroachment. We put just a small little bit of a wick just above it, and then we move down. I'm watching this down close candle. I do not want to see it offer us any support here. When we want to see us go here, it, if there's anything here that we could use to get down, I would like to see us get down with the get down, right? That makes no sense. I said it. And I'm just using this, and I've come over to this chart just so to see whether or not we can invert this gap, move down below this level, and then see if we can find some liquidity down here in this low quarter or out here. And I believe I put my stop loss some wild location like down here somewhere, as if we're just going to keep, pouring down through these levels. Now, if we can get down below these levels and begin to use the 50% range or the quarterly range at the quarterly level as resistance, that's ideal. That would be ideal. And then it would just be a matter of us holding to logical places. And the first logical place would be below 17,209. That's the first logical place to take profit or take exit. However, it's a location that we just left from, but we're inside of the new week gap, right? So the gap is gonna operate like that. It was difficult to find entry today until price slowed down. Once price slowed down, then things kind of started looking up for us. I'm moving my stop loss here, and this is what I call a risk reduction stop loss, as everybody else calls it, because what it is a protective stop loss. I don't want to expand my amount of drawdown, so I just wanted to move it to this position. All right, so we closed in the premium of that gap that we just drew, and then we are still below the 50% range. We've turned over and popped up just a little bit on the 50% range. All right. On my LS3, at a intermission of a quadrant. I'll just pull this over. I don't want to distract myself with that other stuff. We're at the intermission of a quadrant. And what I call the intermission of a quadrant is, so this is today's London session. We traded down just below the low of it before we made this move above the London session high. So here's London session high. We took that level out, and then we traded back into the London session. We traded into the low of this 15-minute candle. Take that low and pull it forward. It sits in the premium high of the LS3, right? What is the LS3? LS3 is when you take 3 London sessions and then you create a standard deviation from the low of the first London session to the highest London session, but there must be 3. So of all 3 of these, any one of these can be in the middle of the range. This one seems to line up exactly with equilibrium, the consequent encroachment of the total range. Right now, we're in the premium of the range, but we're in the premium low. This London session, once we left there, we moved up into the premium low, not of the range from the high to the low, but of the range from the lowest London sessions low to the highest London session low. And then it gives us these levels. What I like about these levels is that periodically, as we zoom in here, we'll see that the bodies are closing right on this intermission between the premium and the discount. And right now, it seems like I just got stopped out. Yeah, it looks like I'm about to get stopped out. It really, yeah. I didn't want to see that happen. But yeah, we turned over, we popped up, and we ran the um right back above the uh consequent encroachment of the weekly gap, and we just popped right back up. We are closing in on that 25% level, and the 25% level of the total range is right here. And that's one thing I don't really like about trying to trade the weekly gaps, because when we're pricing through, there are a lot of overlapping weekly gaps, and we can't see them all visibly uh, on the chart, right? So there are a lot of weekly gaps, and they're all overlapping. So you could look back a month or two, a week or two, maybe a year or two, and you'll find that imbalance. Oh, excuse me. You'll find that imbalance is still holding sway over price. There's a small imbalance here on the 1 minute. That was a small imbalance right here on the 1 minute. I was hoping to see that it was going to hold price for us, but it didn't. We just turned over and returned back to the 25 of this range right here. And I say 25% level. What I really mean is I'm looking at the new week gap. And I'll pull the gap down. There's a new week gap. This is today's gap that we created. We ran to the quarter of the weekly gap. Boom. Traded right back down to this imbalance. Boom. Traded right back up to 25% level. Boom. And the only thing that I could think to do at this point was to sell again, right? It's just kind of sell again. So I just went down to the 30-second chart to see if it's going to give us any opportunity to get short here at this level, because this is the 70% retracement. We ran down to the 25% retracement, and then we returned. It's just that my experience at this point is that this range should not offer us any resistance. This range should not offer us any resistance because we hit OTE. We ran 25. We ran back into up to this level, and then the next level should be an immediate delivery to the downside. But we had that protected stop loss on, so we didn't lose anything. It's just that we just had to rinse and repeat. Now we're at the 50% level, and what it's really doing is really trying to get me to over leverage, right? To add multiple contracts at this point. If at this point I would begin to add contracts, then could price do? Price could take off and skyrocket at this point, and that's not what I want to see. Price could just take off and skyrocket, and because what am I thinking? Oh, as price came back to this level, I could probably add in for the continuation to the downside. No, that's not what we're doing. No, 1 week, no, thank you. 1 minute, we'll have to just wait and see what happens with that. And what was I saying? Right. What I was saying is that we see how price closes equally along this level. Now, the wicks of the candles are doing something very odd here that we don't often get to see, because this is unusual. This is truly unusual price action that we are dealing with right now. Right? This is really unusual price action. We have stuff like this, like swing highs, right? High with two lower highs, two intermediate highs. Then we have price apparently breaking down, but not quite, right? Apparently, this is flat. We respected the wicks, we respected the closes of the bodies. We have a shift to the downside. We come back up. We put a wick here into the upper wicks of these down close candles. We have another down close candle. We have a move back up into the wick of this up close candle. Then we're retesting the open of this candle on the close of this candle on the 15th. It's 15-minute consolidations. They're the worst to trade. Any other consolidations, you'll see price action and delivery that's going to be what's the they're going to have a little more clarity when 15-minute candles consolidate. It's terrible back and forth price action. But that's not what I was looking at. What I was actually looking at, what we're talking about here very quickly was this range here. And we'll have to just wait and see whether or not this is significant, right? Because I'm not telling you that this is not an indicator or even a trading strategy. It's just that it's very interesting to see premium discount. It's very interesting to see what happens if price goes from premium, right? Then we close in the premium low. We open premium low. We run all the way down. We close here, discount high. We open. We close here in discount low. And so we close here in discount high of. So okay. It's very difficult to express how these ranges create their own zones of premium and discount. That's what I wanted to say. So whenever we enter this range, which is literally premium low has a premium high and a premium low of its own, right? And we'll see price as it's moving down. It comes up to literally that sort of intermission, that sort of a consequent encroachment level of that, but we haven't closed above it in a while. And this is the 15-minute chart. Maybe the 15-minute chart is a little bit too high of a time frame, but the reason that I'm looking at the 15-minute chart in this way is because I want to give it that much time to do what it needs to do, right? I would like to see the 15-minute chart like here as we come down below the low of this up close candle. Did it stop me out? No, I'm still in a little bit. We want to see price move into the discount. And then what do we want to see? We want to see, uh, you missed it. Ah, we want to see discount become its own premium and discount range, right? We want to see that happen. We want to see price begin to go lower and then stay lower. We want to see us close in the discount. We want to see us, even if we rally, not rally as high as before. We want to see us close in these low levels. We want to see us close in the premium high of this level. Our next wick, we want to see it maybe enter this range, this level above 17,360.50, right? Maybe. But then we want to see price move down lower. We want to see price dissolve below this level. Now remember, this this is a measurement of the last 3 London sessions, right? The London session from 3 days ago, it's low to the high of the highest London session in the last three. That's why I call it LS3. It's the London session 3. And then once we get below, and this is the target range. The target is to get below. What would you call this? Oh, consequent encroachment of the LS3. But then we have 1/4 of a standard deviation to go to where my take profit would be. Now, what I'm not targeting is and I'm not targeting a full standard deviation, right? Because we're inside that range. The full standard deviation is 15,066. That's not what I'm targeting. Half a standard deviation would be 15,773. That is not the target, right? That's not what we're looking for. Quarter standard deviation is it's a wild looking range, but it is 1,400 ticks. 300. It's like 350 handles or so. And it seems as if that would be an unusual range, but it's not often that the London sessions range is larger than the New York session range. It's not often that it turns out like that. We can consolidate for the rest of the day, and then in the aftermarket or in the pre-market, then we would make the move, and then we look something like that. We stayed up in this range for an hour, 2 hours, 3 hours, 4 hours, 5 hours. And then after the market is closed, then we'll find, oh, wow, look, there's a straight line down to 15,066. And then everybody's like, well, great. Oh. Yeah, we're just trying to stay in the discount. Trying to stay in the discount. 2 minutes to close of the 15-minute candle. 2 minutes to the close of the 15 minute. Mm, mm, mm. Is my audio working? Mic check one, mic check two. Mic check one, mic check two. Okay. It's possibly working. And now that price is doing what it's doing, there's not much else for me to do. I'm still watching the weekly chart. I'll put this off to the side, and we'll see what we can glean from that. And I'm still watching the new week gap. We're down below consequent encroachment of the new week gap. We've retested the quarter level, and then we've turned and went the other direction. I don't believe that we're going to see any acceleration until we get below that quarter level. We might see price begin to dissolve. We have news coming out, right? If I'm not mistaken, we do have news coming out. Um, now, because I'm in this trade, my thought is to stay on while this trade is active, just a little while longer. But I don't think that that's going to be possible for me to do. Yeah. You see how we've turned over at this point again. We are back above consequent encroachment with this move to the upside. 5 seconds left in the 15-minute chart. 5 seconds left in the 5 minute chart. And we have a new 5 minute candle. Mm. Are we waiting for the news? Is that the deal, right? Is that the deal? Are we waiting for the minutes? Normally the minutes don't really, they don't really mean much. Like tomorrow we have core inflation, we have the inflation rate month over month, and core inflation and the inflation rate tomorrow. And then CPI, PPI, no, 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 sorry, not CPI. We got PPI and Michigan consumer sentiment on Friday. Mm. What I'm holding for is some displacement. I'm not really looking to make profit today. I'm looking to reduce my drawdown and um what is a better word? Reduce my drawdown and just take a small and have a smaller losing day. Just reduce the loss that we have taken today. Um Personally, $2,000 is easy to lose because I want to be specific about what I'm trying to say. $2,000 can be extremely easy to lose to put you into to knock you out of the market for the day with your max drawdown. $2,000 is easy to lose when you're on side. $2,000 is also very easy to make. The market can just deliver, right? It can just get real greasy and just slip. So the best thing that I find when I'm in a real good trading groove is to make sure that I keep my drawdown low, not knock it out in one day. Excuse me, not knock it out in one session, but try to just keep it low. In the 5 minute chart, we have an issue with this down close candle that I don't like. See this back and forth that we're doing here? We ran to this up close candle, we ran to this down close candle, we turned over, and we ran to this candle, touched this level on this, we touched this level on this up close. Sorry. We touched this level on this up close candle, rejected, closed, respected the up close candle, traded to the wick, moved down, traded into this little gap area, moved down below it, closed, popped up, moved to this down close candle, and now there's a conversation about whether or not we should go back the other direction. I think that is ridiculous. Let me reduce my drawdown here, reduce my stop loss. Should I move it to just below break even or just right here? Up just below or just above, just below or just above, just below or just above. And just below should be good. If we come all the way back up here, I really don't want to be in this trade no more, right? Just above. I'll take a small loss if it's necessary. And the thing that I'm looking at is my stop being right here at the open of this up close candle. We traded into the wick, we dropped down. We have all of this price action to the left that to me, I would think that it would register that we've already traded these levels and that there's no need to go back that direction. Because going back that direction and moving higher, to me, is extremely bullish. And I don't believe that the market is bullish. Nobody believes that the market is bullish, right? Nobody is saying, oh, whoopee, we just, it's going our way this time. Now, can I be wrong? Right? Can I be absolutely dead wrong? And all of a sudden, yeah, the market just pops up and runs off and just does this, that. I could be. I could be. I'm not gonna lie. I'm not gonna lie. I don't want to think like that, but I mean, I do want to think like that because it would mean that a lot of people could really recover and have much of their retirement money back immediately, right? Or even more if we can, pop the top off the market and continue to rally. But I think that what we all want is a more stable market. If we're going to continue to move up, if we're going to move up, or if we're going to have any types of we want sustainable price, right? Sustainable price action. Right now, we have high volatility in the markets. We have a lot of uncertainty in the market, and we can tell by the way price is moving back and forth. Is that certainly we would expect price to be breaking down by now. That as we left London session, as we left London, we rallied. We think, I think that we found liquidity in this area and in this range. Once we found that liquidity in that area and that range, then we started to break down, right? I think. But no, it's more consolidation style price action. We just retested the 2 hour closing price of the 2 hour candle. Uh, show of hands. Do you think that through lunch? Oh, we're on the lunch. We're on the lunch session now. I was about to ask, do you think that that through lunch we're gonna run to the bearish order block, and then in the PM session we're gonna get down? I don't know. I don't know. I don't know. I don't know. Because I don't see us moving down right now. As I'm watching the 1 minute chart, we're moving above down close candles, and then we're using them as support. We're not respecting these up close candles and candles. We're not. We did here. We traded to the low wick of that candle, and we moved down. Now we've traded to here. But we're up above the candles on the 1 minute chart, and we're not showing them any respect. I'm moving my stop loss to protect the stop loss. It looks like it's coming to get me. It's an extremely long range for us to return to these levels to do it, but we haven't closed below these 5 minute down close candles. So we have a 1 minute and 55 seconds to do so. But we were not able to get below this level. We weren't able to get below this level. We weren't able to get below that level. And it doesn't mean that we just can't slip and slide and go ahead and go. It's it's just that we're consolidating at the consequent encroachment of the weekly gap. And this is gonna come right up here and stop me out. And there's two trades that went like $200 in the money, and I did not take them off. And it's okay. It's okay. It's okay. The worst thing that I could do is have two trades that go to $200, a couple of hundred handles or whatever, and then I take the trade off, and then I'll come back and look at the chart later, and then you know, it's like somebody's drawing a silhouette of Mount Everest. That's painful. Ah, that hurts. That hurts. Don't do it. Yeah, that hurts. Okay, well, okay. I know what you're thinking. Hey, Grady, had you taken those two trades and just gotten out when we got to those levels, you could have been, you could have reduced your drawdown by $400. I could have. I could have. But you know that if I would have sold here, right, if I would have sold right here at the top of this level, 15 macros, 15, minis, I could have gotten out right here, and then I could have rinsed and repeated and then got out right here. If I would have known. Yeah. So is that like a pendant, or whatever it is? I don't know. I was looking at this. Ah, price is just beginning to narrow. Mm. That's cool though. Now let's take a look at this little unproven, untested LS3 philosophy I have. Mm, 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 mm. The highs are very organized. And I know that there are the same number of candles, right? There's the same number of same number of candles. It's just interesting. Hmm. It seems like there are more candles. It seems like there are more candles up here than down here. Although they're the same number of candles, there's like this wick, 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 and then solid body closes all along this area. Solid body, solid body, solid body. This is a higher close. This is a higher close. Sorry. This is a higher close. This is a higher close. That's a lower close on that one, but a higher close on this one. Yeah. Mm, mm, mm. and it's roughly lunchtime. We're inside the lunch session. All right. Well, I'm gonna go ahead and shut it down for the day. That's about all I can do. I need to probably turn on the fan or turn on the AC. It's a little warmer in here than I want it to be. And yeah, those last two trades had a lot of potential. And I think that I think I don't have to think. I see that I've made very good entries with those, and I was able to kind of stay in them for a while. And so that is the difference between um trading the micros and trading the minis. There's a lot more risk when you trade the mini. There's a lot more risk, but in the same range, it's a substantial difference in the reward. Because you'll always want to keep your risk low and leave your reward a little bit wider, right? So it's normally whatever it is that you risked. Oh, I risked $300. 3 to 1, your reward would have been 1,000, basically. And it's just like that. If you can keep the risk on a mini down within under $400, with your ideal risk being 100, normally it's 10 to 1 on an hourly candle. Normally it's 10 to 1, roughly, and it is normal. Are we running to the mean threshold of that 15-minute candle? Mm, is that what we're finally gonna do? Run right up here and take out all of these highs? Don't know. I don't know. I don't know. I don't know. I don't know. Hmm. All right, we've been over about 2 hours and 40 minutes. I don't want to take any trades during lunch, although this lunchtime trade looks absolutely beautiful. It's just in one direction. We traded directly off of the consequent encroachment of the new week gap, and we're making a move toward the high. Oh, lovely, lovely. What do I think the destination is? Let's see. If I went to the 1 hour chart, I don't know. We have this new week gap. We have this imbalance. We have this imbalance right above this level here. We could be targeting that 1 hour imbalance. I was looking for consequent encroachment of this candle here, or the mean threshold of this candle, but we could run this candle directly to consequent encroachment of that gap, and we'll probably do that like the PM session, and then we move to the downside. Okay. I will record if I decide to come back at 2 o'clock and sit down to record. I may record. I'm not sure if I will go live, but I may as well go live, right? And then yeah, then we'll see what happens. Then we'll dissect and prod away at the issues that we had today. The main issue was Wix. Um, ICT's gray pool was in effect today. The gray pool was in effect. Oh, wrong one. Go from the body to the height of the candle. Oh, bam, right there. Pull it forward. Boom. Gray pool. Gray pool's in effect. And I believe that's the idea that if Wicks act as gaps, right, then this would be the discount of all of the Wick action. That's the premium of all of the Wick action. Once we hit the discount, this level was in the once we hit the premium, right? All of this price action was in the discount. Now here in the lunch rate, we've run to that discount of one more time, right? It's kind of like discount low with wicks into the discount high of this band of wicks, and we'll see if we reject here. Oh, Green Giant. To me, it's rare to see us run London Session High and then not use it as a catalyst to take out to go back down. I think that's rare, right? I know we do it, right? We'll run London Session High. Like today, we did turn over and we went down into the discount of London Session with at least one move down. That very first move down that it was the longest. We moved down into the discount of London Session. We closed and then we moved back up and started building our way. And only on this particular candle have we closed outside of the above the London Session on the 15-minute 15-minute chart. Mm, mm. Yep. Yippers. Mm. Yeah, thought about buying that. Finally decided to quiet down outside. I just noticed that. I heard a bird singing, and I was like, "Well, where's the guy in the Harley and the other guy who had the lawnmower, trying to clean my window with a lawnmower?" So strange. 50 seconds left in the 5-minute candle. 50 seconds left in this 5-minute candle. Right after we've ran into this sort of a gray pool area. Go just like imbalance, pull that through. Hmm. I don't think so. I don't think so. Oh, excuse me. I think the excitement of the morning. Okay, the excitement of the morning and then the like kind of this burning of mental capital. It's kind of those two things are like, I needed to probably take a break and come back to this later. It just would not be profitable for me to um like try to keep pushing right now because everything that I wanted to see and was anticipating seeing, I have not seen. I have not seen this 2 hour gap, this 4 hour gap. We just closed in the premium, turned over, dropped back down to consequent encroachment, and then popped higher on the 4 hour gap. And this is what I'm referring to. Well, I'm saying 4 hour, but I'm 24 hours. I am looking at the 2 hour chart, and this is what I'm seeing here. I'll go ahead and remove that clarity. Yeah, right. So this imbalance, we moved to above it, dropped down below it, traded back up into it, dropped out of it, moved back to the high of it. That seems like, oh, that seems like mm, there's not really much I can say about that because it doesn't really. I mean, because what I'm looking at is still this same imbalance on the 2 hour chart, and I could pull this forward, right? And because these two may or may not be overlapping, I could probably pull this to here to the high. And now on the higher time frame, we're operating in the discount of this particular level. And what would this mean? Well, it could mean that we opened this level, we moved above it, we traded down below it. Now we've traded back up to the high of this level. Money green. We traded back to the high of the level, touched that level, and just like any inversion gap, once you touch like the inside high of it, you're going to touch the. Then after that point, you're going to probably deliver back below this level, out of this level, fair value gap, deliver to the downside, and then we keep going. And there's a lot to remove. When in trading, it's like remembering choreography, right? So we're all on Broadway, and there are three different shows that we're performing in this week. Now we cannot tap dance in the ballet show, and we cannot swing dance in the tap dance show. But we have to remember all of the different steps. And then Price at this point is being extremely lethargic, which seems to me very disappointing. I'm very disappointed that Price is so lethargic right now when it really could be, energetic like it was before. There was a lot more pressure when the price was running because you'd have to try to time it and catch it properly. But I think I would feel differently had that first trade gone my direction. Had that first trade gone my direction, and I was like, well, let me tell you something. I feel differently if all my trades went my direction. I feel completely differently. I don't know if that's true for you, but for me, yes. If every trade that I've ever taken went my direction, I feel differently about it. Mm. Oh, welcome to the stream. Thank you. It was like, yeah, yeah, I traded ICT. Yep. And you say, oh, ICT. I'm not sure if you meant that to be um how would I put it? Like, oh yeah, another ICT trader. But yeah. And I think that it doesn't really matter what strategy you decide to choose. You're gonna find almost the same amount of difficulty in every trading strategy. It's just it's the trader, right? It's not the strategy per se. But when you're looking at the market and you're saying, "Oh, is this support or resistance, or is this a fair value gap, or is this the opening range balance?" All of this different stuff, right? Do we have momentum coming into the market, right? Is volume, if you're watching level two, it's all the same, right? It's all this sort of a balance between um, experience and sort of technical precision. Right? Do you know the material or do you know the strategy well enough to execute it? And at the same time, is the market moving in a way where you have enough experience to get involved? Because like if the market is moving extremely slowly and it's your second day trading any strategy, yeah, you could probably get in and make some money. These markets are a little bit different. Yeah, a little bit different. And it's not that I don't like it. It's that the most frustrating thing about this is I can't seem to catch it. I can't seem to get on side. When the decline first began, I saw the decline coming, right? And it was almost as if I got so excited because I could see, oh wow, the market is setting up for this move to the downside. What good did that do me if I got so worked up and so excited that when it came time to take the trade or take the option, no matter what strategy it is, that I'm not on it, right? So yeah, yeah, trade ICT. So um, and I wish more people could understand it because I think that when people are able to communicate it to each other through their own experience, then that's when we really start to do better with trading ICT. And what I mean by that is, it's just like my channel really talks about um how it's very specific when he trades it, And when we trade it, we have to decipher what we see, if that makes sense. And it probably is obvious what I'm trying to say, but we have to decipher what we see, right? So this move to the upside, right? There's about 10 different things that I would probably want to look at when I see this. Well, where did price start? Oh, price started here. Where did it come down to? Oh, it came down here. Oh, okay. If it came down here, is that an optimal trade, right? The optimal trade from the high to the low? Well, no, that's a 50% retracement from this level to this level. However, from this level to here, right? We've just come down and we hit the 87% level. All of these wicks are on that 79% level, right? Here's 70. So this is the optimal trade from this high down to this low. Once we came into this level, then we rejected and we moved back to the upside. So, it's like it's things to look for, but if you continue to look at it on your own, then you'll start to see how not like a it's not like a hall of mirrors, but it's like a hall of mirrors, right? Meaning, how do I know that the market is going to reverse on me? That's a major question that I was struggling with for a while until I started looking at OTE, right? When you look at the optimal trade entry and you said, "Oh, well, I got short here." If I put up a fib, the OTE fib, and we come down to the 62% level of the range from this high to low, and then we start to fail or we start to do anything weird, it's like, oh, the entry models that ICT will kind of give you also give you your exit models. Like, oh, I've been holding this for a while. Should I stay or should I go? Well, when you look at your entry models in both directions, then you say to yourself, oh, yeah, I see. I'm entering, how do I put it? I'm entering where other people are exiting, right? So this is where a person would exit if they were looking at this range and said, oh, yeah, we've come very close to hitting sell side liquidity, although we haven't taken any out, which is the reason. And I'm a little bit frustrated right now. It's because we're in a stupid consolidation on the higher time frame, on a higher time frame consolidation. We have these 15-minute candles sitting side by side, and then we've gone into lunch. So there's really no movement today, basically, to really speak of. Then when you look at the overall range, we moved thousands of ticks in both directions. This is 1,400 ticks. So yeah, I just hope that I hope you enjoyed, whatever part you saw. I'm not sure if you're still here, but I just hope that you enjoyed what you saw. And one of the things that um I really yeah, it's warm in here. I'm gonna turn this fan on. One of the things that I really enjoy hearing is when people say that ICT traders don't make money. And I laugh about it, and I think that it is not completely untrue. It's not completely untrue. There are notable people who really understand it and do very well, but I think for most beginners are looking for something that's gonna be tailored to quick money. Over the long term, if you're like saying, "Hey, look, I want to take in a week, I want to take 3 good trades, right? I want to take 3 solid trades, and I want to make money on half of the day." Problem with this is you don't get you it- you'll need to turn off your account. You need to go to paper trading, and then you'll just need to just take entries over and over and over and over and over to get those types of reps. So that in the future, when you're trading your funded account, or you're trading your funds, then you're more accurate with your entries. And I think that's one of the things that hurts ICT traders the most is that the strategy is not like breakout, or it's not like wick test, or any of that stuff, where you can literally just kind of take these quick shots over and over and over, and it's almost like this sort of a timing thing that you're looking for. As much as the best trades for ICT are going to happen at 10 a.m. and at 2. Those are the best. And you may find some other opportunities to get involved, but it's going to be um, on the hourly chart, and it's going to be when hour switches over. So at the beginning of the market, right here at 9 a.m., at the close of the 9 a.m. candle, here we go at 10 a.m. We're in the upper range of that 9 a.m. candle. At 11, right? At 11, we're at the interchange between the 2 hours of 10 and 11. That's another good opportunity to trade. Going into lunch is he doesn't advise it, and I don't either. But then you have 1:30 to roughly 2, 2 to 3, and then like 3 to 4, basically. And so when the hours change over, because the hourly candles give you enough movement, it's just that you have to understand how to wait for the close of the hour and incorporate the ICT strategy in between the hours. It gives you less trading and less trading opportunities, but on the lower time frame, it also gives you the opportunity to say, oh, okay, well, I know what I'm waiting for. So being patient, when people say, hey, just be patient, right? What are you telling me to be patient for? At least what I would suggest is wait for the hour to close. On a day like today, what we have is a consolidation on the higher time frame. That's why we have these wicks, because the 15-minute candles are consolidating, which means that we have multiple hours where the open and close are in a very tight range. So, but I mean, again, today was a very difficult day to trade because the ranges, even on the 1 minute candles, made risk management impossible. And yeah, I took a few trades, and they didn't really pan out well because risk management was really impossible. I was saying to myself, oh, okay, I want to see the prices begin to close, and then I want to begin to see a little bit of delivery, because I understand that once we kind of get out of the consolidation and we really begin to kind of deliver to either pool of liquidity, then normally the wicks kind of absorb into the body, right? So it's mostly body and less wick, and we just had all wick all day. Yep, but it's been like that. You can look in the pre-market, look yesterday. And what I'm saying is, you can measure these wicks from here to here, and that's 800 ticks, 200 handles, wick alone. So, yeah, but yeah, for everybody who sees this recording in the future or who stop by, go ahead, like and subscribe. I appreciate you guys just spending your time with me, watching me do this. In the future, I really would like to refine um my understanding of price action to the degree where this stops being what do you call it, trading entertainment, and really becomes a source for people to learn, um to be more accurate. One thing that you can learn here is to definitely manage candle wicks, manage candle wicks and tails better on your chart. That was today's lesson. I'm gonna put that in my notes. My pre-market notes did not include looking for long range wicks, but I knew we had a day like this coming. And I'm really proud of myself today because normally this is the types of days that I hit max drawdown or blow my account. It's that middle range consolidation day. So we'll go ahead and look at the higher time frame, and I think 15 minutes is a good enough time frame to look at. Although we have this curl in price, still don't feel confident that we're going up from this point. It seems that you see how we have this sort of let's take a look at this. We have this movement here, right? I don't really believe that that's really going to send us anywhere. Something about it is really telling me that if we went to the 30-minute or if we went to the hour, then the only thing that we're doing is we're building into a bearish order block, right? We're building into a block of down closed candles, and we're making like a stair step into that block of down closed candles, almost the same way we did here, where we began this stair stepping pattern. And then we're going to get to a particular level, and then it's going to say, oh, okay, well, that's enough. This is where we need to get to. Let's move to the downside, right? I'm looking to the left here, and we have this imbalance on the 1 hour chart. And pulling that forward, we're right at this level. And not to sound like, uh, you know, supply and demand, but it does seem like an area where we stopped price here, we gapped. It gave us a little bit of energy. It gave us the energy that we needed to make this move to the upside. We obviously rejected. We still have relative equal highs here, and we may have to do something with that later. We still have this imbalance here. We may have to do something with that sooner or later. But I'm looking for this range on the higher time frame to show us, hey, look, buddy, on the higher time frame. Let me remove this. Man, it's very cool how we did that. Delete that. On the higher time frame, we could go ahead and pull this gap back. We could take a look at this imbalance, right? We could take a look at this volume imbalance and say, oh, look what we have here. We can delete some of that stuff. And I'm looking at the highs of the 4-hour candle. We just took the high of this 4-hour candle. Here's the close of this 4-hour candle. We have an hour and 22 minutes left in this 4-hour candle. And if we came back tomorrow, we would probably say, wow, look, all of the wick that we had up here, the only thing we were doing was trading into this up close candles wick in order to make a move to the downside. Or this becomes a swing high because we are consolidating right now. We know it. We can make a swing high into this level and then a swing low to this level, right? And we have a lower high here. And as long as we stay below the consequent encroaching of this imbalance, then yeah, we could just be building up slowly into this range before we make a move to the downside. Yeah, but that's going to take a lot of time. And that's one of the things that requires patience. And that's the pain of patience. So, yeah, I just wanted to man, again, I just want to say thank you for everybody who stopped by watching today. Please like and subscribe. I'm Grady. This is Traded Entertainment. We'll see you tomorrow. Bye bye.